Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and returning on the show with us today is Cecil Musgrave. He's the publisher of Investors Guru, which can be found at investorsguru.com. Many of our listeners might remember we had Cecil on just a few months ago talking about his favorite gold stocks, and so far this year has been very interesting. We led off on our last conversation saying that we would have a follow-up on uranium, and so that's what we're here to do today. Cecil, welcome back on the show.
Hi, Colin. Thanks for having me. Happy New Year.
Yeah, Happy New Year to you too. And the beginning of the year, this first trading week, has certainly been very interesting. It seems to indicate that something different will happen this year. I'm not sure quite what that will be yet, but we're here to talk about uranium today. And uranium's a sector that is always of particular interest to me. It's a very niche sector. It's small, and there's a very few companies that investors have to choose from, so that when things start to move, they really get exciting quickly. I remember a couple years back that when the uranium stocks were moving, that Denison, as an example, would go up 10 or 20% a day for day after day, and that's really only the kind of movement that you see in a small sector like uranium. Cecil, I just want to get a broad overview of what you see going on in the sector today.
Uranium is a funny metal. I started following uranium closely about a few years ago in I'd say mid-2010, because you look for uptrends and then you want to find out what's behind it. And a lot of the companies, uranium's kind of backwards in that you see a lot of visibility in the short or the near term, but you really are not sure whether that growth trend, whether it's a tech stock or a biotech or whatever, is it going to be there 10 or 20 years from now? Like Uber looks fantastic right now, but can you see past a couple years in Uber? It's hard to say. Uranium's kind of the opposite in that the long term seems dead on. I mean, there's a growth trajectory in uranium. I've never seen a business industry that seems so certain, probably 3, 4, 5, 10, 20 years from now. It's short term that has been cloudy and remains cloudy since Fukishima. So let's go into that a little bit and try and clear it up, because I can start with the fundamentals of uranium. Majority of uranium is used in nuclear reactors, and I'm a big proponent of nuclear power or nuclear energy because it's efficient, it's clean for the environment, doesn't produce any CO2. It's actually, most people don't realize this, but it's actually safer than even renewables. And it's the most efficient type of power that we have. Now, I'm also for renewables, don't get me wrong. I mean, where you can put in a hydroelectric dam, where you can do wind, solar, you should do that. But if you need when the wind's not blowing and the sun's not shining, you need reliable baseload power, and nothing beats uranium for that. When the natural gas pipelines were freezing in the States and natural gas spiked a few years ago, the only thing that prevented more blackouts were the nuclear power plants were running at full capacity without a hitch. So I like uranium. Let me give you another example. A typical power plant that powers, say, 1 million people in the States might use something like 40,000 barrels of oil a day. Now, even with oil down to under $40 a barrel, you're talking $1.5 million in fuel to power those 1 million homes. The same thing might require, I took a few notes here. Let me see here, 9 tons of coal, which would be approximately 400,000 a day at today's prices, and somewhere in between there and that 1.5 million for oil would be natural gas. Well, compare that to the cost of uranium. We're talking 7 pounds at a price right now of around $35 a pound. So, for under $250, you've got the equivalent amount of fuel as you would 1.5 million in oil and 400,000 in gas or in coal. But one thing I like about uranium is if uranium goes back to where it was in 2007, which was $137 a pound, it really doesn't make a big difference to the power utilities. It is material, but it's only about 15% of their operating costs. The big costs are their operating costs and their capital costs, not their fuel costs. So I like that about the industry. So then you got to look at the numbers and see, well, a lot of people, well, maybe uranium, they're not opening as many nuclear power plants. Wrong. There's more power plants today than there were before Fukushima. And China's the big driver. China, let me see, we'll have somewhere over 200 reactors. And compared to the U.S. right now with around 99. So even Japan is restarting their reactors earlier in, I should say around June or July. Sendai 1 and 2 started in Japan, and there's been a few others. And it has taken a lot longer than I had expected, but it's starting to come on. They're starting to come online, and instead of underfeeding their reactors, which actually produces more uranium, that's going to reverse, and they're going to be consuming more uranium. And then, of course, with the additional Chinese reactors and other countries, even Saudi Arabia and the United Arab Emirates are building reactors. India is building more reactors, so that worldwide, like as of January, there were 439 operable reactors worldwide, with 66 under construction and 158 on order or planned, and 330 proposed. So, we're going to double the number of nuclear reactors worldwide within the next 20 years. So, and a lot of it's starting to come on now, and it's going to accelerate going into 2020. So the demand for uranium is going to grow, and I think I saw a report recently where at a 6% annualized rate for uranium consumption at the same time when the supply is dropping. The U.S. had an agreement with Russia, the megatons to megawatts supply agreement, which lasted 20 years. It ended in 2013, and the U.S. only produces something like 5 million pounds out of the 50 million pounds that they consume annually. And if you notice, the relationships with Russia is not so good. So they're going to depend more on, Canadian uranium and growing their own production, because they still have, close to 100 reactors right now. So I like it short term. I like it long term. Sentiment's still negative, and these stocks have just been trashed. But if you look back at the charts on the uranium price, you'll see how when they spike, they spike. And I've been wrong I really thought 2014 was going to be the turnaround year for uranium. This was based on Abe getting elected in Japan, and I felt that they would, restart their reactors more rapidly, and more of them would be online by now, and that hasn't happened. So it's taken longer than expected. But there and the power utilities, the nuclear utilities, there's two prices for uranium. There's the spot price, which is currently around 35, and then there's the longer term price. I haven't looked at it recently, but I'm guessing it's probably 45 to 50. So typically a power utility they'll want to secure their supply, and they'll be buying in both markets, but they'll want to buy in the longer term market to secure that supply out years. Well, recently a lot of them have been just buying in the spot market because it's available. There's been an oversupply, and that should go into deficit in the next few years, within the next few years. And on the first sign of that, it's going to be like a herd of elephants going through a keyhole, because these utilities are going to need to secure their supply, and you'll have a rush into the spot price and into the long-term price. At least that's what I believe. Now, I've been waiting for a while, and 2014 is when I figured the bottom would happen, and it did happen. The summer of 2014, the price bottomed out at $28 and started moving up that fall, and it's just been there. It went up to 40, 42 thereabouts, and now it's back to 35, but it's kind of going sideways. Even with oil coming down from $100 a barrel down to about the same price, and it seems like there is a correlation between all energy prices and even oil and energy, but there shouldn't be. I mean, if you have a coal-fired plant, maybe you can switch it to natural gas or to oil or some other method, but a nuclear power plant is stuck with uranium. And like I said, it's only 15% of their cost, so they're not going to want to switch fuel anyway. But the incentives for these miners to produce more uranium, even as the demand comes, goes up, and these utilities start switching from buying in the spot market to the longer-term market, and you see that spike again, if that's what happens as it has in the past. That supply can't just come on stream overnight. It takes even longer than for gold or any other type of mining, because uranium is the most highly regulated form of mining there is. So a lot of these, I remember reading a few years ago about BHP's Olympic Dam project in Australia, which is one of the largest supplier of uranium in the world. They canceled their expansion plans, and they're cutting back, and there's been mines closing up. Well, it's going to take years before they come back online, and that's after they make a decision, which I don't believe they're going to make a decision until the price is probably north of $75, $80 a pound. A lot of analysts are predicting, because it doesn't make sense. So you could get a quick run, it could be far, and it could last long. And longer term, I like it. It's just, is it going to happen now, 6 months from now, or a year from now? So, I'm kind of nibbling on the dips, and there's very few companies to choose from. There's really only a handful.
Yeah, well, let's get to that in just a second. And just to recap your points, you just laid out a great fundamental reason why uranium is going to be a great place to be over the coming years. One thing that took me a little while to understand years back when I first looked at uranium, you touched on it a bit there. You said the operating cost, even when the price is at a decent price for uranium, the operating cost for the utilities is relatively low, as opposed to oil or coal, where the oil price goes up double, where your energy prices are going to probably go up by something close to double. I've heard, and I'm not sure if this number is correct, but from the inception of building a nuclear power plant, the actual cost of the fuel over the life of the nuclear power plant is close to just a couple percent. So, the pressures of the price going up is not really a concern for people to stop using utilities, to stop buying, and people to stop powering with nuclear power. And that's really a unique situation that can only be found with nuclear. And I'll let you touch on that, but I also, as time is limited, want to start leading into what places you're looking, what kind of stocks you're looking for investors to get involved in, that they can get this upside.
Yeah, I guess that's the point I was trying to make, is that like an average reactor, you're looking at $8 billion versus hundreds of millions to build, maybe coal-fired or natural gas. And so the capital costs aren't as onerous, but the fuel costs, as I mentioned earlier, are much higher. So the fuel costs as a percentage of the total project. Now, it all translates into your power costs, but those capital costs are amortized over, say 40 years. And so if the fuel cost goes from 35 to 135, it's really, you may not see any increase in your power bill, because it's such a small percentage of the overall cost. The other costs have been amortized and they're worked in. So it's hard to make the initial decision to come up with that $8 billion. I guess the point I'm trying to make is that nuclear power plants are amortized over like 40 years. So once the decision is made, once they have the ability to raise the $8 billion to build a nuclear power plant, your cost should be stable, because even if uranium goes from $35 a pound to $135 a pound, it represents such a small percentage. Don't hold me to that 15%. It may be a little less or a little more depending on the plant. But the point is that just because the price has quadrupled doesn't mean your power bill is going to quadruple. You may not see any change at all. Whereas if you're talking natural gas or coal and your input costs double, you're going to see your power bills shoot up, and we have seen some of that. So that's another advantage of nuclear power in the long term. It's stable, base load power, and it's environmentally, the birds like it because there's no windmill, no turbines turning, and it's steam coming out of those stacks. It's not smoke, and there's no CO2 going in the atmosphere, and it's reliable. So you wanted me to mention a few different companies right now?
Yeah, so let's start with kind of your 3 or 4 favorite companies and go from there.
Well, I guess you got to start with Cameco. They're the largest producer, the largest publicly traded uranium company in the world. That's CCJ on New York and CCO on the TSX. And the things I like about Cameco is they're focused on the Athabasca Basin. They have the largest resources of any uranium company, especially in the Athabasca Basin. They're still on track, I believe, to do their 18 million pounds by 2018. I think they just put out a report that said that Cigar Lake, which is one of, if not the highest grade uranium mine in the world. I think their largest is their MacArthur River, but it's coming on strong and should produce 16 million pounds per year, as long as they can get the permission to expand the production at their plant, at their mill. And they own 50% of that. So and they're in plays all around the world, but it's my main Athabasca basin play. It has about a 2.5–3% dividend yield right now. It's now showing positive earnings on my screen. It was in the negative there for a while, and they're one of the lowest cost producers in the world. They're also in uranium marketing, and they're in, I think, 5 different continents. So they're the go-to uranium play, and the stock is at probably a 10-year low right now. It's breaking lows as we speak at around $11 on the U.S. side on the CCJ. The other thing there's one thing I don't like about Cameco right now is this tax liability that they have, and I'm trying to get a handle on it. I've seen analyst reports where they're saying that they think it's already in the stock, but there's some big numbers, and it has to do with their European marketing, where they're selling their uranium through there, and the Canadian government wants taxes on that. And I think the IRS is involved now too, basically the same argument. And the numbers are like, in the hundreds of millions to over $1 billion. I'm trying to get a handle on it, and I don't know if the market's fully factored that in. I don't know what the implications are. It looks like another 1.5 to 2 years before it's ever going to be resolved. So I guess the way I'm trading it is I don't own any right now. I'd like to own a little bit, and the stock has been a great trading stock over the last year. It tends to it'll drop a couple bucks. It'll make a new low by about 5%, and then it will run up a couple bucks. So I guess Cameco, I'm actually gonna trade a little bit. Every time it comes down, breaks its old low, goes 5% lower, I'm probably going to step in and buy a little bit. And when it runs up a couple dollars, I'll probably sell it and hold on to a little bit for when it does finally make the turn. Because, fundamentally, I like the company. It was $50 a few years ago, and, now it's sitting at around 15 Canadian. And so that's the big one. That's the one that has the liquidity the institutions look at. It's safer, bigger. But then I'm also looking at some of the juniors. So I'm looking at Energy Fuels, which is UUUU on the NYSE MKT, EFR on Toronto. I'm looking at Fission Uranium, FCU on Toronto, FCUUF, I think, on the OTCQX. And Denison, which is DNN on the NYSE MKT, and DML on Toronto. And I've liked all 3 for a while. I own a little bit of Energy Fuels by way of I was an investor in Uranus Energy, which was sponsored our site and one of our featured stocks since 2010. And I have actually learned a lot more about the uranium industry because of contacts with the company and learning about the ISR process and their plays. And so Energy Fuels, the thing I like about them is they have one of, if not the largest uranium resource in the U.S. right now. They have the only operating conventional mill in the U.S. So they're positioned. They have a lot of resources they can develop quickly if the price goes higher. And in the meantime, they have some production. And in addition, by merging with Uranos Energy mid last year, they got a hold of their Powder River Basin assets, their Nichols Ranch project, which is a low-cost ISR operation, which can help them produce additional ounces at low costs to feed into Energy Fuels' sales contracts, which are at a premium. They're at like $55 or $60 a pound versus the spot price at 35. So they can use that production to help them meet those premium sales contracts in addition to their own production. And Energy Fuels has a lot of inventory right now that they can turn into cash, and they've got a pretty clean balance sheet. And I like the news that they just put out like a week ago that their insiders have bought over 1 million shares of the company, and hasn't performed that well over the last year, like every other uranium stock. So maybe there's an opportunity there. Looking out, short term, near term, midterm, you got to pick your points. And this is a good time. January to May for all mining is typically the best time of the year to trade mining stocks. And then, like I said, longer term, you don't want to be caught out if we do get one of those big uranium spikes that I mentioned. So do you want me to just go on to the next one?
Yeah, so let's keep moving. We still have a couple, you'd call them juniors, but more of the sizable juniors, and I know you have some information on those.
Okay. Well, I'll move on to Fission. Fission has been on my top 30 stock list since 2012, I think, at around a quarter. And then it spun up to, it was called Fission Energy then, and spun up to a little over $1 when Denison bought them out. And this was for their eastern Athabasca assets. I think it was Waterbury Lake. And so you got some Denison shares, and then they spun out the new shares, which became today's Fission Uranium. And that focused on the Patterson Lake South deposit, which right now their PEA, I think last year, or the resource report shows they have over 105 million pounds. And they've done a lot of drilling since then, so that'll probably be revised this year. And they have a big drill program going on over this winter. That's typically when they move, is over the winter when they're doing all the drilling. So, and the stock's weak right now. Like the shareholders' equity, the stock came down right to the shareholders' equity value, which was around 55-60 cents last fall, and just spun up recently on a Chinese investment at 85 cents a share. So the stock, you'll see it's gone straight up. So I think it could actually pull back a little bit before maybe it makes another leg up going into their drill programs. So the thing I like about it is very good exploration team. I mean, not only did they shore up 105 million pounds, but it's the grade, very high grade, very shallow. And that looks like a deposit that's definitely going to be developed and probably bought out. Now, the thing that knocked the stock back from, it was like $1.10, $1.20 to that 50-cent level was this merger that they were going to do with Denison, which is another one of the stocks that I'm very interested in. And I was happy to buy Denison at over $1, but luckily, for technical reasons, I didn't. So now it's down to around 50 cents a share, and trading near its shareholders' equity. So these companies, you're not paying premiums. If anything, you're buying them at discounts to what they're showing, and there's a lot more than that's reflected in those booked values. Clean balance sheets on both of the companies. Fission needs to continually raise money because they're doing their exploration. But I think Denison in itself could be an acquisition target at some point. And Denison back in 2007, I think, was $15 a share. So now it's 50 cents, and much bigger. I mean, they've got resources in Africa and all over the place. And I've seen some of their transactions, and they've been creative. They're picking up companies for cash values with resources and a lot of potential to develop them further. So there's not a lot. There's only a handful of uranium stocks. Well, I'm focused mainly on gold and silver right now, or have been since the summer. I don't want to take my eye off of uranium, because while you have hundreds and hundreds of other resource companies, you can count them on one or two hands, the uranium plays that aren't government owned, that are publicly traded, and that have value that you'd want to invest in. So I mentioned Denison, I mentioned fission, I mentioned energy fuels. I also find Kavalik interesting.
Yeah, and like you were just saying, there's really only a handful of quality stocks. I think if you go down to a more speculative position, there might be another 20 or 30 juniors at this point that you could comb through and reasonably say have something actually material in the uranium space.
Correct.
And we're going to talk about a couple of them right now. But another thing is, we just had an interview a couple weeks ago with David Morgan, and he said there's no run like a gold run except for a silver run. And for me, I think that really the ultimate run is a uranium run. And it's for exactly the point that you just outlined, that there's so few outlets for investors to go into. And one of them that you're going to mention right now is a company that I'm actually going to disclose that I'm invested in, Kavalik. And I want you to tell us a little bit about that.
Sure. I'm not invested in Kavalik, but I'm watching it, and I watched it a few years ago, but kind of lost track. Recently, I talked to them to get updated, and they're focused in Nunavut in the Northern Territories of Canada, and they have I think around 43 million pounds of 43101. It's a district scale potential uranium, and some of the highest grades outside of the Athabasca Basin. The company has no debt, has a market cap of around 20 million. With they're showing, I'm looking at the balance sheet, and it says that there's a little over 50 million in shareholders' equity. I'm not, Colin. You might know better than me. Do they have any cash at this point?
Cash balance is quite low, as to be expected at this point in the market.
Of course, yeah. So, this stock was 75 cents back in 2011. I think it represents a lot of optionality leverage to higher uranium prices. They're going to need to do more drilling, but I don't know in this market right now if you want to raise money that might represent dilution to spin your wheels just to raise more pounds at this point. Maybe they need something a little higher grade or whatever to tie it all together to get the market excited again. And they have other plays, I think, I don't know if it's northern Saskatchewan, in the Athabasca, the Genesis project. I don't know anything about it. I'm just getting into the play right now. But right now I'm looking at a company that, with a market cap that's trading at less than half of what they're showing on the balance sheet for shareholders' equity, like I said, with no debt, trading it under a dime, and waiting for, probably going to be quiet until this the uranium price goes up, and when it does, there's a lot of leverage there, so that's probably all I should say. Is I'm just starting to get my teeth into this play, and I'm watching it. It's on my radar, and there's a couple other plays like that, but you want to find. I don't want a pure exploration play that doesn't have anything. You want to have those resources, and just for that reason alone, because of the grade, because of the size, if you see uranium prices pushing $50, this company should react quite nicely.
Yeah, and you provided a pretty good spectrum there. From the institutional, the only real company that exists for institutional interest is Cameco. And then Denison and Fission, of course, with very strong assets that have done decently well in a bad market. Some other ones on the small side for listeners to look at, and I don't really know too much about all of them, but U308 Corp and Plateau Uranium both have well in excess of 60 million pounds between their deposits. And, if you're really interested in the Athabasca Basin, even though it's there's no pounds included, you have ALX Uranium, a very small market cap right now, and there are opportunities, and it'll be interesting, Cecil, to see which ones play out the best. And I want to end here asking you a difficult question that hopefully you don't take an excuse to get around. What's the prediction for this year and next? I mean, when do you have any indication of when you think these things are going to start going up?
I think you're going to see the usual winter run. A lot of these stocks are probably going to trade anywhere from 25 to 50% higher from now until May. Going into PDAC, a lot of companies, they schedule their drilling programs and their big announcements to come out around, that conference and other mining conferences over the winter. Then you'll probably see the usual sell-off into June and July in the summer doldrums, and that's another opportunity to get back in. And that applies to Cameco as well as the juniors. Cameco's kind of on its own because it has earnings and it has production, whereas a lot of the others are just developing. So you want to know where I see the price of uranium this time next year, or?
Yeah, let's start with that. Where do you think it'll be a year from now?
Well, my charts tell me it could probably be north of probably 50, 55. But I still don't consider that a spike. When you see a spike, you're going to see this thing pop $10 in a short period of time. It'll pull back a good chunk of that and then start trending higher after that. But you want to be in before that spike. And if you look back, the low was 28. It ran up to I think around 42, pulled down into the low 30s. It's now around 35. So the next move, my guess would be late summer, August, September. There's a lot of utility contract buying that goes on, and that's what moved it from 28 to 42 in 2014. So at that time, my guess is we could see maybe a bump up through 52, thereabouts, 55. But the big push is, will the restarts in Japan accelerate? That's another good question. That could move things along. Will the utility buying that I mentioned in the spot market start to accelerate going into 2070? As a lot of those long-term contracts, they're naked right now. They need that security of supply, and they're not going to be able to get all that in the spot market. So that's going into 2017. That's the big spike you could see. You could always have another fission uranium type discovery that could excite the market for a while. That's possible. Or fission itself. Like I said, they're drilling, I think, 11,000 meters this winter, if not more. So, there's a number of events like that. On the negative side, pray there's not another Fukishima type event. And you could have a general sell-off in the market. Going into the U.S. elections next year, we're due for some type of correction. Maybe we're seeing it. This January reminds me a lot of 2 years ago, and I wrote an article at that time talking about the January effect and how it's has been a good predictor for how the market's going to do for the whole year. So I'm interested to see whether where the market closes at the end of January as a sort of an indication on how we might do all year round. So all stocks are affected by those type of things, but I'm still willing to take that risk longer out because I've looked at something like on the uranium participation units on the TSX, symbol U, and I don't get it. You're gonna sure, if the price of uranium doubles, you'll double that investment, but you've got no leverage. If you would have bought the mining stocks, you probably would have made 5 times, 10 times your money. So why buy it? It's a parking place, I guess. I guess the way I would trade it is they publish their book values every month, and if you see a deep discount to the price of the uranium, then maybe you want to step in and buy it and then wait till it goes up to value. But why pay a management fee? You can't hold uranium like you can hold beryllium. There's no taking physical when it comes to uranium because it's radioactive. And there's no futures market that I know of, and I wouldn't trade futures anyway. So you want exposure and leverage to uranium, you've got to buy the uranium miners. Yeah, that's, oh boy, you're going to hold me to those numbers, aren't you?
Well, thank you for giving us specifics there. And like you said, nobody really knows exactly, but the long-term picture is there, and I don't think anybody's going to hold you down, at least to month-by-month numbers. I really appreciate you coming back on the show, Cecil. I might have to title the interview Everything and Anything About Uranium because that was very comprehensive, and we certainly touched on every stock worth knowing. So
okay.
Thanks so much for coming back on the show.
Thank you, Colin.
All right, and just once again, that's Cecil Musgrave, publisher of Investors Guru. That's investorsguru.com. It's a great site, comprehensive. You can do a lot of research there. It's got more hits than almost any other site on the web, and it's a great resource that I tap into. So I would suggest all of our listeners head over to Cecil's site and give it a look. And thanks again.
Thanks, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?